our two panelists, who I'm very excited to speak to, and I'll ask that they stand as I introduce them, is Lebo Mokgabudi. Did I say that correct? Lebo Mokgabudi. Can we give a big round of applause for Lebo, guys? Lebo is the CEO and the founder of Inclusive Digital Marketers. And we have Rami Makete, who is on stage with us. Can we give Rami a big round of applause? Rami is a reputation and crisis management specialist. It's interesting that we have two people more leaning towards the communications end of their day-to-day work, but we have a conversation around the state of fintech in South Africa, but more specifically, what that looks like, where are we going from here, and really some of the big loopholes that we need to be on the watch out for. Can we get a big round of applause for our two panelists? I want to start here. There's a number of things that we need to speak about in fintech, and a big part of it just has to do with the ability of the industry to exist, firstly. And anyone who's played long enough in the fintech space in South Africa will tell you very clearly that their biggest obstacle is the regulations or lack thereof that makes the playing field a little bit unclear. And so I want to start the conversation around the existing regulatory frameworks. Lebo, in 2020, you said something very interesting. You said a fintech startup should not be expected to adhere to the same licensing conditions as a bank. Why not?
Wow, you've done your research. Be careful what you say, guys. It gets recorded, clearly. Good morning, everyone. Just a correction in terms of what I do. So I actually consult to the IFC as a digital financial services expert, and I'm also on the board of an Old Mutual subsidiary. I'm not the CEO of the company.
Hey, she's from Old Mutual. She's from Old... Zach?
But to your question specifically, you said startups should not necessarily adhere to the same licenses that banks do. So the reason for that is the licenses that are given to get a financial services bank, right, license rather, you need to adhere to certain requirements. Number one, for instance, I'll just make examples. The capital requirements that you have to have, the amount of money that you have to have, right, to ensure, and customer protection, the compliance requirements, a startup generally cannot meet that, right? So the capital adequacy requirements that you have to adhere to are really rigorous, right, to get a financial services license. To adhere to the Financial Services Board, even those requirements are really rigorous. And for a startup to get that takes, number one, really long, right? It takes about a year or 18 months, actually, to get that license, even for a bank. Even for a bank, it's quite difficult. Then the capital requirements a startup can't get. Then that's the one thing. Then on the other side, the reality is that you can't compare a bank, the number of clients a bank acquires and services, to a startup. The risk that a bank takes compared to a startup is not the same. So why do they need to adhere to the same license requirements? It doesn't make sense. And then, I guess, as the tenure of fintech and financial services and innovation went forward, going forward, then that's why they create the sandboxes, in different countries, right? In Singapore, now in South Africa, in Nigeria, etc. And sandboxes enable sub or central banks to then create, let's call it a safe space for startups to play and assess how are they taking out products and how are they servicing customers and how are they doing trial and error, where a central bank can say, okay, let's see if this is safe. Then another thing, the reality, a regulator, just to your initial statement, the objective of a regulator is to create a safe space for everybody to play. It's an enabling, their objective is to create an enabling environment for the corporates and the fintechs and all financial services to play. But their other objective is customer protection. Startups do not think of customer protection. Yeah. Startups generally think about innovation, how to take out innovative products, and how to acquire customers and make profits. That's generally their objective. Customer protection is not one of them. That's why we see the challenges in Kenya when it comes to credit and lenders, digital lenders, that the customers have fallen short, right? There's a lot of credit out there, fantastic, but the customers have fallen short. And a regulator's priority ultimately is to ensure customer protection at the same time. So they have to do a balancing act, right? So in order for them to do a balancing act then, a sandbox is a better place for them to allow startups to also play in that field.
Yeah, I want to speak about, because this customer protection issue is very big. Did you guys see the story that broke about a week or two ago about one or other of the credit bureaus in South Africa had an information breach? And it turns out this breach happened because the password to the system that protects and holds all this data, customer data, millions of customer data, the password was password. No, true story. Check it out. And so they've got a massive crisis on hand. They've got a credibility crisis on hand. They've got a legitimacy crisis on hand. And really, their reputation is at risk. I want you to answer that for me, Rami. Why is it that, one, startups don't think to that, but on a scale of things, if there's like a checklist, a priority checklist that startups should meet, how important is that to safeguard your reputation, to safeguard your credibility, but and maybe more rudimentary, is credibility as important in the fintech space as, say, if you were in any other tech space?
Yeah, 100%. Just to add on something. So I basically also do cybersecurity. So the company that he's actually speaking about, if I'm able to mention it, is TransUnion. So,
I didn't want to mention
it.
them.
But we need to. So with that data breach, actually, so it was a cybersecurity hack. So cybersecurity and cyber attacks are most prevalent in Africa, but number one country in Africa with cyber attacks is South Africa. So one of the things that startups never look at is data protection. Data protection is probably one of the most biggest things that a startup is able to do, and to say that we can actually guarantee you your data protection. Because if you're saying 54 million data has been hacked and already has someone from there, then you're literally saying that you and I, Oliver's data is out there. And I think from yesterday, they were able to leak out the president's ID, able to leak out the president's, personal information. What are you able to do with personal information? And for example, for financial services, I saw someone from financial services, when you're able to do that and have a data protection as a startup, you are able to go to financial services to say, I'm able to guarantee you data protection. Why? Here's one of the key things. Fraud prevention is number one thing. Insurance fraud is becoming the biggest thing in South Africa now because you are able to duplicate accounts. But startups are able to meet that and bridge that gap to say, we are able to prevent this. And if startups are able to do that, their playing field is able to be, they're able to be in a bigger playing field. And like what Lebo said, those are the things that you need to start looking at as a startup.
So a big part of what new technologies offer, especially in the fintech space, is exactly that anonymity that is supposed to be a replacement to data protection, right? So if we look at a blockchain ledger, for instance, it's supposed to be significantly safer than existing on a spreadsheet at TransUnion that can be hacked. But there seems to be, in South Africa at least, a culture clash and a culture shock towards the adoption, especially amongst big corporates, of blockchain technology, cryptocurrencies, NFTs as a tool of trade, but as a means of safeguarding against information. Because I can just imagine if Old Mutual were to go and convince the tens of millions of 50-plus-year-old customers that your information is now protected on some sort of a blockchain ledger that's highly encrypted, that they'll have a tough time conveying that sort of message. How do we overcome that culture clash? To be able to allow for new technologies to become prevalent in how we operate.
Do you want to take it?
Yeah, no, Lebo, that was for you specifically.
So I guess South Africa in general does not have a high-risk culture in general. Our risk appetite is quite low in general. So I'll start, that's
Sure.
the beginning, right? And these new emerging technologies were unknown. So 5 years ago, the word blockchain was a trend. Cryptocurrency, even 7 years ago, was trendy. It's something that we spoke about, cryptocurrency, blockchain, even in conferences. It's 5 to 7 years ago, we spoke about it everywhere, but no one really knew where it was going. Now, however, I think that has changed fundamentally. So regulator aside, but fundamentally, I think you see it in corporates. So corporates, I mean, a lot of corporates, you're starting to see them even having divisions for blockchain, for digital assets. That's signaling of something, right? JP Morgan has invested a whole unit on digital assets. Citibank has a whole unit on digital assets and blockchain and cryptocurrency. I think also with the emergence of the Visas and the MasterCards acquiring crypto companies and acquiring blockchain startups even, that also is signaling that something's changing, right? I mean, Visa has invested in a lot of, like Visa has partnered with Currency Cloud as an example, and MasterCard has acquired actually a couple of crypto companies. I think that's also signaling that something has fundamentally changed. Even with the regulators. So regulators, I mean, now, you know, we have a whole lot of digital currencies, right, from regulators. Kenya was one of the leads from an Africa point of view, but even South Africa now has done that, right? They were dancing around with the theme because what they don't know, they tend to be fearful of rather than invest in it. But I think that's fundamentally changing. And then also the use cases have changed. There's one thing about a trend, emerging technologies, this is nice to have, but if there's no use case, so what, in a way, right? I think now there's use cases in terms of if you have a crypto wallet, if you have cryptocurrency, you can actually pay for stuff with it. And that is important, right? Now, even in terms of the fact that you can attach a crypto wallet to a MasterCard, just as an example, and use it anywhere makes a difference, right? If you can't, I remember 7 years ago, a company called BitPesa, right, it was doing currency exchanges and Bitcoin. I'm from Kenya, and then all over different markets. And we had that conversation. I was like, oh, this sounds nice, great, but what can I do with it? And I opened a wallet, great, I had Bitcoin, but I didn't know what to do with it. And if you can't use it anyway, from a customer point of view, you think, so what? Right? But now there's a lot of places where you can spend that money. To NFTs, there's a lot of places where you can actually spend and actually buy a token and actually invest in it. Where it will go, it's all a misnomer. We all really don't know. But
I want to ask you: are we there yet, Rami, where the use cases are so ubiquitous that you sort of have no option but to be a part of it? I mean, there are still some coffee shops in Johannesburg where they don't have Zapper or SnapScan, right? Which really are no longer new technologies, if we're being honest about it. How much more should we expect them to have a crypto wallet where I can, pay for my coffee that way? Lebo says we're a risk-averse country, and I completely agree. We're a risk-averse nation. Too much risk makes us uncomfortable. Our history is a very precarious one. And so we like to play safe, not just economically, socially, or politically. We like to play it safe in all of that put together, wherever that confluence may find itself. What will it take for South Africa? And really, and I'm asking South Africa because we're a country that's slower to adopting new technologies than the rest of the continent, to be able to make these use cases the norm case.
You use the word safe, right? I just want to do something quickly. By a show of hands, who shops at Woolworths, Pick and Pay, go to any retailer? By a show of hands, right? We all do, right? And that's where you started. If you want to build a safe environment, you have to build a trust factor. You trust Woolworths based on the quality, right? But let's say, for example, we all go through a crisis of load shedding. How are you then able to pay? You can't scan anything because electricity is down. So you have to, for example, for a 50-year-old, say, your social services can actually be put onto a crypto. But it has to start with the educational side of it all. You have to start developing the business model. Go to a ShopRite checkers and say, let's start incorporating this. ShopRite is going digital like crazy. They are literally saying, okay, no, we understand that you need to have access to information. Let's start building you the data and the airtime part of it all. Then you start encrypting. Then you start introducing that. South Africa's savings is increasing. Banks are taking the stockful model. In order for you to take the stockful model, you need to safeguard it and put the insurance side of it all, which is then comes the blockchain, Why don't then stokvels introduce the crypto side of it all? That means you're mitigating risks, solving the problem as well, but you're also introducing the trust factor. Because if a grandmother from Ngutu or from Rustenburg, for example, can say that ShopRite Checkers is behind this, and they believe in this, that means the educational part of it all has started to begin. That means the South African culture then is moving towards adapting the new technologies as well. So the partnership model, as Zach has said, starts with the marketing of it all. The marketing is able to educate you.
So there's one side to the trust factor, right? And that is it has the credibility because it has the cosign of major corporations that I've been spending my money at my entire life. But when it comes to something specifically, when we look at cryptocurrency, a big part of the distrust that a lot of people had is not understanding it, and that's one. But two, just like the volatility of it, right? The rand never fluctuates by more than 3% on any given day. But take any of the top 5 cryptos, and you might have that fluctuation depending on what's happening, right? Bitcoin dipped really hard when we thought, oh no, it will go up because there's a war happening in Ukraine, and people will adopt this MasterCard and Visa card of Russia, and so a lot of Russians will adopt crypto as a means of transacting, yet that wasn't, we misread the situation entirely, and that didn't happen. In fact, what we saw was a further dipping of Bitcoin, and just the stigma attached to it around, yeah, but criminals use Bitcoin. I know criminals use regular money as well, but criminals use Bitcoin, right? And it was originated from there. That part of the trust factor, that part of the culture shock, that part of the regulatory misconception, right? How do we overcome that particular? Because the South African Reserve Bank has an entire Fintech council, but still no regulatory white paper, really, on you know, the use and transacting of cryptocurrencies.
It has to go back into the educating side of it all. Financial services have to be educated on what is crypto. How can crypto be used as an alternative? But most importantly, you need to have a stable coin towards the crypto part of it all. Once you have the stable coin based on it, and the education and the information has been literally put, then you put a business model to say, okay, fine, let's test it into, you know, the transport sector, for example. Use Bitcoin for a transport sector, then you're able to do that. I think it has to start from that perspective as well, because if we then have to, you know, put crypto as it is, the misconception is huge. Then you'll have an Elon Musk tweeting to say, nah, Bitcoin isn't it. And then whatever they see, whatever Elon Musk has to tweet, then people take it for as a basis, and then Bitcoin dips. But the trust factor has to start from the regulatory side of it all. The trust factor has to be built around, you know, the policy, but the policy makers have to understand what Bitcoin is.
Lebo, are we not miscalculating, you know, the technology when we say, ah, but we have to regulate crypto, hey, we have to regulate NFTs, when the entire foundation of the technology was that it's a deregulated thing, right? And South Africans have a tendency to over-regulate many sorts of things, right? The mining charter is one example if you think about mining. The banking charter is one such example where some of the banks are saying you overreacted to the African bank situation and you're creating a bit of a liquidity problem for us in some instances. One is the call for regulation the right thing? And two, how do we safeguard against over-regulating? I know we all here signed a petition for a Startup Act, and we hope the president would say something about it, yet very little was said about it. But let's say we become successful and government gets overzealous and over-regulates these sort of things. How do we safeguard against that?
So I think generally regulations does stifle innovation, generally, right? Let's use mobile money as an example. The reason mobile money, one of the reasons rather, mobile money scaled in Kenya specifically was before there was regulation for mobile money. In most other countries, then the regulators became aware, they regulated mobile money in different countries. It stifled the growth of mobile money in those countries. So when there was no regulation, when people are not sure, you know, how to I guess, govern this type of business, then innovators can come in and disrupt and actually grow and scale their products and services. Even why, you know, a lot of like startups actually, and why they tend to scale, I think, in other African countries more than South Africa, is because we're highly regulated in SA, right? It does kind of stifle the growth of innovation in general. So I think, yes, so that's I think regulation can be a challenge. However, if you're in a highly regulated market already, then I think it is important to understand the regulation, have a compliance officer who understands regulators and consistently engage with regulators in your startup. I think that's critical. You can't say, oh, I'm going to ignore regulators and just go ahead. That will stifle your growth. That's the reality. I think have a person and invest in a compliance officer or regulation person who then engages with the regulator, because when it comes to scaling, you need to be friends with them.
Yeah, absolutely.
Ultimately.
I want to open up the floor for some questions. So in addition to getting a chief marketing officer, split your coins with the compliance officer. There's a lot of money to spend. The floor is open. There are roving microphones. Let's get some hands going. Any questions or comments towards the panelists? Yeah, Zach?
I think as the mic also goes there, just to also separate cryptocurrency and blockchain. I think that's also important. There are a couple of use cases on blockchain specifically that could be relevant for smart contracts, that could be relevant for digital ID, that are more relevant and probably are seen as safe.
Yeah.
Because there's a lot of use cases comparatively to cryptocurrency. So I think it's also important to separate those.
So the South African Reserve Bank actually does use blockchain technology to consolidate in every 24-hour cycle the transactions, which has made it very easy for them to flag suspicious transactions. That's how the Guptas got caught. But these sorts of technologies are being adopted in many instances. So a thing the Lisa Chakanyako told me a while back is that what took them 72 hours to do in that consolidation process now takes them 15 minutes. And I thought that was a significant step in the right direction. But I guess the technology has to find a medium through which it exists, right? And at the moment, crypto is the big one. Zach?
Yeah, it's actually a very good point. I mean, both Rami and Lebo, thank you for your time. I think the point I was going to make is what you just mentioned, is we need to separate cryptocurrencies from blockchain, because blockchain could be used and should be used in the health tech industry. You'd be amazed. Should I stand up? Oh, okay. You'd be amazed at the advances that health insurers like Discovery and Sanlam and the usual suspects are claiming to be doing, but at the same time, there is still no electronic health record system in South Africa, right? And that is it. I mean, a startup here, it's an open call, anyone in the health tech space, if you can develop an electronic, fully digital health tracking software based on the blockchain, you'll get a lot of money from a lot of VCs, but it has to work. But you have to work with the big insurers and get their buy-in. So, I mean, but just to bring it back to crypto, have you considered the misassociation with crypto is that it's volatile, I get it. But if you look at stable coins, say USDT and USDC, and there are others now that are linked to the US dollar, why is it not possible, in your opinion, that we can talk to the big five banks and the Reserve Bank in South Africa to allow a stable coin-driven remittance platform in South Africa, where you're still paying the USDT or USDC equivalent of 40 Rand for a cappuccino, and it's not going to go to 65 Rand because of volatility in non-stable coins? That's something that someone here can get to the regulators' ears at some point, because then it takes away all the risk of volatility. Just your thoughts on that.
All right. So the big thing about, we separated crypto and blockchain. So one of the key things, especially in cybersecurity, and why crypto isn't used around the big five banks, is that money can be lost. We've seen a lot of cases where billions have been lost. Yep. And I think a lot of times they have that fear around it to say, we could literally invest in this. But the security side of it all is that we still don't know it. We still don't understand it. And security is a very huge thing all over the world. Because if you're able to give people that level and amount of information and data as well, it could lead into a lot of things. But I think if we're able to mitigate that, and if we're able to create solutions and strengthen the size of blockchain as well, to say, this can never be hacked, this is a guarantee of it all, you're able to have the safeguarding as well. And for example, a lot of banks are having a huge transaction in real estate. If we're able to pinpoint real estate with blockchain and are able to give a solution to banks, maybe then they will introduce that. But there's still that huge misconception as well to say, look, crypto's for fraud, basically. It's for scamming people, because that's what's the huge misconception. So that's why there's a lot of fear around the big banks, especially the commercial banks.
And any other hands? Any other? All the way in the back over there.
But
Sure,
Zach,
that's
also, it
incredibly
is
far.
happening. So that conversation is happening in the central bank of pegging it to a stable point.
Okay. Hi guys, Wesley from Fast Company. I'm interested to know, if you know, how far is this South African Reserve Bank process with crypto for South Africa? Because essentially what that is a study, they want to assess, the impact, risks, and all those kind of things. So where is that process now?
Does anyone know? I'm not from the Reserve Bank. She's not, he's not, but do you guys?
So there was an article that was taken out earlier this year in January by Business Insider. So that article was basically saying that, the Reserve Bank are in discussion to actually creating the policy and regulation to cryptocurrency. So the conversations are ongoing. The conversations have been opened as yet. So I think it's just getting the right policy makers, having the understanding, getting the services board as well, the financial services board on board with the policy. So the conversation has already started.
But just to give you an idea, and I'm by no means saying this is going to happen, but it really takes no less than 8 years in South Africa to get any sort of policy passed through the relevant channels that it needs to get through. It takes 2 presidential terms to get a single policy document passed in this country. And the Reserve Bank is an independent institution, so they may have a little bit of favor in that instance. But I wouldn't hold my breath for the next 3 years, because for the last 2 years, the Reserve Bank has been telling us that, hey, we're working on something, but there's no draft paper out for any sort of public comment yet, unless you guys have, privy access to it. There's Parliament's not having the conversation at all. They just throw around 4IR as a buzzword for political favor, but there's no real substance to any of what is being said in any of those discussions. So I do think it's going to take a while for that sort of regulatory grip to catch on. But in the instance of all of that deregulated space, you say, Lebo, that a lot of innovation is taking place there. But I want us to talk about the innovation locally. We depend a lot as South Africans on the innovation that happens out in the world, and we sort of just adopt. Do you think enough is being invested both at an IP level and financially into driving local innovation, and not sort of we can wait for the next coin, coin offering in wherever to happen before we get excited about it, or just spearheading the emergence of new technologies as originators in South Africa? Is that happening enough?
I mean, enough is relative, right? Is it happening? Yes. I think the growth of the VC community in South Africa is there, right? So there's a lot more VCs in South Africa than 10 years ago. There's a lot more investment in startups and innovation than 10 years ago. And I think the reality, even to Zach's comment, it's a borderless economy. There's a lot more also South African tech startups that are growing outside of South Africa, may not be to the rest of the continent, but to the rest of the world. So a lot of the times what even VCs have seen is that South Africa tech companies are very relevant for developed markets because of the nature of a type of the market that we have. Yes, it's a parallel market, parallel economy. We do have, a rural and an urban economy, but a lot of the tech startups that are built for the urban consumer are tending to grow outside of South Africa into other developed markets. So that is happening.
Yeah. Would you say that's because, especially when we think about fintech, right? Would you say that has to owe towards early innovation and adoption of technology happening much earlier in South Africa? So part of why M-Pesa, for instance, could thrive in Kenya is because it was an underbanked country, whereas more South Africans have a traditional bank account than any other country on the continent.
Okay. So South Africa, the financial services industry in South Africa works generally. right? And generally everybody has a bank account, generally. However, the issue here is different from Kenya and other countries, is the cost of financial services here is really high. So people may have a bank account, but the use of it is very low, right? So that we still have a financial inclusion issue and a resilience issue in South Africa. That still exists. People generally have a bank account, they receive their money into their bank accounts, but they withdraw it, right? And then still a cash economy. So we still have a high cash economy, even from an urban and a rural consumer, high cash economy. So that's still a problem, that's still a challenge, that still needs to be solved. So a lot of the challenges that are even being solved in Nigeria and other markets are still here. You know, you go to either the township economy, the rural economy, those challenges are still there, but it's a cost issue. It's also a product relevance issue. You know, are they the right relevant, the right financial services products for every consumer in South Africa? The security guard, does he have an insurance product that is relevant for him? Does he have a credit product that is relevant for him? A security guard, just as an example. You know, no. You know, so that is still needs to be solved, and that's the type of product, if somebody builds that can scale into the rest of the continent far easier, you know, than others, because that's relevant to the type of consumer that is then in the rest of the continent as well.
Yeah, absolutely. Are you excited, Rami, about the future of fintech in South Africa? Do we have another Yoko in the next 2 to 3 years, or is Yoko really just the isolated case, and we sort of just have to take that as our trophy and keep moving? Or do we have the next Yoko?
Yeah, we do. We've got plenty, and I think Lebo touched on it. You know, from the urban side, you know, there's innovations that literally, you know, speak to that, but also from the rural side of it all. We live in a cash economy, but, you know, there are so many innovations that are coming through to speak to that. So it's not going to be just one Yoko. There's going to be multiples as well. And, you know, they're going to be, you know, tailoring everything according to that. So the future is bright for it, especially for the fintech side. So it's going to be booming very largely as well. And it's about finding the solution, finding the right market as well. And if you find that solution in the right market, your product is infinite.
Absolutely. Thank you so much. Lebo, thank you so much. Rami, thank you so much. Really appreciate your time and for sharing your insights with us. Can we get a big round of applause for our panelists, guys?